Do you want to master trend reversal and avoid false signals? Then stick around, because in this video I will show you how to use MACD like a pro. Hi everyone, welcome back to MohsenTrading, where we master technical analysis. Introduction. In the previous video, we covered the basics of the MACD indicator. In this video, we will dive into more advanced concepts focusing on divergences, entry and exit points, and professional tips for more price analysis. If you haven't watched the previous video yet, I recommend starting there first. Now, let's quickly take a look at the chapter titles for this video. Chapter 1, Divergences in MACD. Chapter 2, Using MACD signals for entry and exit. Chapter 3, Professional tips and advanced analysis with MACD. Chapter 4, Combining MACD with advanced strategies. Let's dive into Chapter 1, Divergences in MACD. What is divergence? Divergence occurs when price movement and the MACD indicator move in different directions. It's one of the most powerful tools for predicting trend changes. Types of divergences: regular divergence, positive and negative. It appears at the end of an uptrend or a downtrend, and it has the potential to signal a trend reversal. Example: price makes a lower low, but the indicator forms a higher low. Hidden divergence, positive and negative. This type of divergence typically occurs within the main trend and signals the continuation of the current trend. Example: the price makes a higher high, but the indicator forms a lower high. Now, let's fully learn the types of divergence. As you can see, we have a regular negative divergence structure, where the price makes a higher high, but the MACD forms a lower high. This is a sign that we might be at the end of the trend and could witness a trend reversal. As you can see, we have a regular positive divergence structure, where the price makes a lower low, but the MACD forms a higher low. This suggests that the trend might be reversing, indicating a potential upward movement. Therefore, regular negative divergence occurs at highs in both price and MACD, while regular positive divergence occurs at lows. Here, I have an uptrend, and I'm showing a hidden positive divergence, where the lower price low is connected to higher low, and in the MACD, the higher low is connected to the lower low. Here I have a downtrend, and I'm showing a hidden negative divergence, where the higher price high is connected to a lower high, and in the MACD, the lower high is connected to the higher high above the zero line. Therefore, as you can see, hidden divergence forms throughout the trend. As you can see in the Bitcoin to USDT chart on the 1 hour time frame, I have shown you an example of regular positive divergence RD at the end of the trend and hidden positive divergence HD throughout the trend. In the Bitcoin to USDT chart on the 1 hour time frame, in a downward trend with a price correction, we observe a hidden positive divergence HD along with the price correction. At the end of the correction, a regular negative divergence RD appears. Once the trend line, which I highlighted with a yellow line, is broken and the price pulls back, it becomes clear that we can enter a sell position in the downward direction. For success in your analysis, keep these professional tips in mind. Divergences are more reliable at the end of corrections or when momentum is weakening. Always use complementary tools for confirmation. Regular divergence is stronger with significant peak or true height. Greater peak or true difference with weak momentum means a stronger signal. Now, as a practice, in the charts you have analyzed, identify a regular bullish or bearish hidden divergence. Explain wherein the trend this divergence occurred and discuss its significance. Now, let's move on to chapter 2, using MACD signals for entry and exit. Key signals. Line crossovers. MACD line crosses above the signal line, indicating a potential buy signal. MACD line crosses below the signal line, indicating a potential sell signal. Zero line crossings. Crossing above the zero line indicates bullish momentum. Crossing below the zero line indicates bearish momentum. Important notes. Combine MACD signals with other technical tools for better accuracy. Always take your trading time frame into account for better decision making. This is the EUR/USD chart on the 1 hour time frame. First, we observe the MACD crossover of the MACD line and the signal line, which led to a buy signal. Then we see another crossover leading to a sell signal, with the corresponding candles highlighted to the histogram. The crossing above the zero line indicates bullish momentum, while crossing below the zero line signals bearish momentum. Now let's move on to chapter 3, where we dive into professional tips and advanced analysis using MACD. Confirm trend strength by ensuring the MACD line remains consistently above or below the zero line. Use histogram changes to detect momentum shifts early. Minimize false signals by combining MACD with trend lines, support or resistance levels. Divergences occurring at the end of a correction phase are more likely to be reliable. By using MACD and confirming support or resistance levels, traders can effectively spot fake breakouts and avoid falling into these traps. This analysis is based on the EUR/USD chart in the 1 hour time frame. Identify the key resistance level. At this level, an ending pattern formed, confirmed by negative divergence. I marked the bearish crossover of the MACD line and signal line, highlighted it as a confirmation for a downward entry. While the price was making higher highs, the MACD showed lower highs, indicating the divergence. Additionally, I draw the lower trend line of the ending pattern and identified its breakout as the entry signal. For the target, the MACD and signal line crossover at the lower levels serves as the exit point or profit target. This ending pattern is a perfect example of the setup. If you haven't watched my full tutorial on the ending pattern, be sure to check it out on my channel. As we can see on the Bitcoin to USD chart in the 1 hour time frame, several key points have been identified as resistance levels and a horizontal line was drawn. Then, after a corrective movement, when the correction reached one of the resistance levels, a negative regular divergence formed, which caused the price to drop. At this point, with the price, this shadow breaks through the resistance level, and a fake breakout occurs. In fact, by observing the negative divergence, we can realize that this breakout is not real, and it is referred to as a fake breakout. The fake breakout is easily identified with the regular divergence, which serves as confirmation for detecting the fake breakout. When the fake breakout is forming, there is no momentum and it shows a decrease. The MACD line and its histogram early show a decline in height. At the same time, the regular divergence that forms serves as confirmation for the fake breakout. At this stage, we can enter the trade using a very professional method. Now, let's move on to Chapter 4, where we will explore advanced strategies combining MACD. MACD with trend lines. Validate MACD crossover signals with trend line breakouts. MACD with EMA. Use short-term EMA to confirm MACD crossover signals. MACD with resistance and support. Use MACD confirmation with breakouts from support and resistance levels. Final tips. Practice combining these strategies to find what works best for your trading approach. Avoid overloading yourself with too many tools. Instead, focus on a few that complement each other well. In this chart of USDJPY in the 5-minute time frame, we have used the EMA 21 to highlight the points where the price intersects with this moving average. As you can see in both examples, the EMA 21 is broken by the price, and this break aligns with the crossover of the MACD line and the signal line. Additionally, the trend line drawn on the chart provides further confirmation for entry into the trade after being broken by the price. It's worth noting that after the crossover and entering the trade, the momentum of the MACD histogram also increases, indicating a strengthening trend and confirming the price movement in the right direction. This rise in momentum provides a stronger assurance for the continuation of the price movement and the success of the trade. In this structure, when the EMA 21, MACD crossover, trend line breakout, and momentum increase all align, it creates the best opportunity to enter the trade. This method helps make more confident decisions about the trend and avoids false signals. In this chart of XRP-USDT in the 1-hour time frame, we have identified a resistance level where the price reacted. After the price touched and broke this resistance, a MACD crossover generated a valid long entry signal. When the MACD enters a bullish trend again and the long signal is clearly visible, this becomes the best point to enter the trade. At this stage, by determining the entry point and a stop loss, we can set the target based on when the MACD line, the signal line, and the MACD histogram cross each other again. This crossover serves as a signal to exit the trade. Remember to always design your trading strategy in a way that MACD signals align with other indicators to confirm the trend. If you have any questions, feel free to ask me in the comments. Don't forget to like, subscribe, and hit the bell so you don't miss any updates. Thanks for watching.